Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah and you are watching IndianOpen. Let's go straight to the headlines. Bank of Baroda initiates a forensic audit of loans given to Diwan Housing to determine the end use of funds after news reports alleged rerouting of money to promoter entities. Yes Bank informs exchanges that the RBI compliance assessment report for FY18 found no divergence in the bank's asset classification and provisioning. R. Venkatramanan, managing trustee of Tata Trust that controls about 2/3 of Tata Sons, will step down on March 31st at the end of his 5-year term. Now, ONGC will become the last Nifty company to report third quarter numbers today. The Explorer may bear the brunt of lower crude prices and a weaker currency. Good morning. It promises to be an interesting day of trade, not the least because the markets are very exuberant. In fact, they are not, but because trade negotiations are firmly in focus. For the world over, I think the most important piece of news over the next 2 days would be what comes out of what's happening between the US and China. Now, high-level delegations will begin the round of talks today. President Xi Jinping will meet with the US delegation on Friday, as reported by the South China Morning Post. And Donald Trump has gone ahead and said overnight to reporters that the talks are going along well and the Chinese are showing tremendous respect. So, well, there is love in the air, topical as that as well too. Let's wait and watch if indeed that results in some fruitful outcome of this meeting. What it essentially does is it doesn't become an impediment to the small bit of a rally that we've had going in the world markets. So from that perspective, these remain very, very important. Speaking of rallies, the US markets did have a rally for a second day in a row. Yesterday, a lot more tempered than what happened on day before yesterday, but still ending in the green nevertheless. Asian screen, it's a mixed bag of sorts, quite unlike again what happened yesterday, wherein a larger part of the Asian markets were up and about. We might have a mixed start in the session today. The SGX Nifty though, indicating what the Nifty has been doing for the last few days, which is going down. Keep in mind, the last 5 days, the Nifty's come off about 2.5%. The Asian screen has gained anywhere between 1.5% to 7%. So it's a completely divergent move between what the Nifty is doing versus what the rest of the Asian screen is doing. What's leading the Nifty lower? I think in trade yesterday, these two charts will tell you what went wrong with the Nifty. It was all about PSUs, to be honest. They may not be the heavyweights, but they have certainly gone off. So firstly, the Nifty PSU Bank Index has fallen over 12% in 6 weeks, and it cracked in trade yesterday as well, with SBI leading the way. In fact, SBI, ICICI Bank, not just the PSU banks, the private banks too went down in the session today. So that's chart number one. And then what happened to oil marketing companies was the other bit. They've all continued to grind lower, maybe because of higher crude prices, maybe because of GRMs under pressure, call it whatever. But in yesterday's session, the OMCs too were under pressure yesterday. 8 of the top 10 losers yesterday were PSU names. That gave you an indication of what was happening to the markets in trade yesterday. Flows okay, volumes okay, market breadth continues to be weak. So that picture remains the same. We'll start off 30 points lower if the SGX is to be believed. Let's see what happens post that. However, amidst all of this, and aside of ONGC, which will come out with numbers later today, the stocks that will or could react at 9:15 a.m., those are the ones that you should monitor. And I think one of the biggest ones in focus today would be Yes Bank. It's succumbed to a lot of selling in the last few days. This is positive news. The RBI's, the bank has said that they have received RBI's compliance assessment report for 2017-18, and in their statement they are saying that the RBI has found no divergence in asset classification and provisioning for that year, which is 2017-2018. Big shot in the arm. Brokerages have written positively about this. I'll be very surprised if this one doesn't react positively. Let's wait and watch for this one. DHFL, couple of news flows. One, that sources have told Bloomberg Quint that Bank of Baroda has begun forensic audit of DHFL loans. This is source-based information, of course. Let's see if this has an impact. If not this, certainly Harshil Mehta's resignation, while he continues to stay on board, but his resignation could have an impact too. So, well, twin blow of sorts for DHFL. Let's see what happens to the stock in the session today. A very strong quarter for Quick Heal. It's a products company, and therefore we compare it on a YOY basis. Net profit doubled to 16 crores from 8 crores. EBITDA margins, more importantly, 31.9% versus 20.8%. That's really the thing that you got to monitor every single time company comes out with numbers. Very strong quarter. Let's see if this one reacts positively to its quarterly numbers. It was a weak quarter though for a couple of other companies like Prabhat Dairy and NBCC. Let's wait and watch what happens to both of these names in the session today. Lastly, a couple of smaller pockets. Firstly, the jute companies, Ludlow Jute, Cheviot, Gloucester. Bloomberg News is saying that Cabinet has approved raising MSP for raw jute by 250 rupees per quintal. Let's see if it brings about a reaction in these stocks. When these stocks react, they tend to show exaggerated moves. So let's wait and watch if they do that in today's session as well or no. There's also that piece of sugar and MSP there, but I'm not quite sure, so I'm not mentioning it here. And lastly, from amongst brokerage notes, there are lots of them that have come in, especially on Yes Bank, as I said. But from a mid-size and a small-size company, this one stood out for me. UBS has initiated coverage. The target price is 215. Let's see if IEX manages to react positively in the session today. So lots of stocks to monitor, and we'll talk about all of them later on as well. But let's tell you first what's lined up on First Word. For the next 20 minutes is the collection of the top editorial stories that we believe we should bring to you. The ILNFS fiasco has gotten rating agencies into the limelight, with the Parliament panel now seeking stricter monitoring on them. Nikunj fills us in with the details. Vishwanath then joins in to tell us why Bank of Baroda has initiated a forensic audit into DHFL. And Yes Bank's got a clean chit from RBI as far as the bad loan recognition is concerned. I just take you through the small details that they have put out. Sajid then joins in to talk about why R. Venkatraman's exit from Tata Trust matters to the entire group. And then we talk about the auto ancillary space, and overall sales slowdown was bound to take a hit on these companies. Yatin lists out why some of them have their own woes to deal with as well as they grapple with trading around near 52-week lows. First up, the Parliamentary Standing Committee on Finance has come down hard on rating agencies and former ILNFS board members. The panel headed by Congress leader Veerappa Moily has recommended a detailed probe into the governance failure at ILNFS board. Here's Nikunj, who's gone through the report with the details.
A parliamentary panel has suggested that the government conducts a comprehensive inquiry on the role of LIC, which is the largest stakeholder in ILFS, and also conduct an inquiry on the role of credit rating agencies that assigned higher rating to ILFS entities just before the company defaulted on its loan repayments. The Parliamentary Standing Committee on Finance has said that the governance failure on the part of ILFS board needs to be thoroughly probed. And remember, the previous ILFS board members included representatives from LIC, Oryx Corporation of Japan, and SBI, among others. The panel has also suggested that there should be mandatory rotation of credit rating agencies rating instruments, debt instruments of a company once in every 3 years, since already debt instruments raised by companies have a longer tenure. The parliamentary panel has also suggested that there should be more than one rating agency carrying out or rating corporations that raise debt instruments over 100 crore rupees. The panel has also asked Department of Economic Affairs and Department of Financial Services to get a status report from regulators on the action taken against rating agencies that rated debt instruments of ILFS as stable.
Okay, and there are newspaper reports, of course, which also speak about how there might be a change or there's a contemplation of a change in the business model for these rating agencies. Instead of the payment being done the way they are, or the revenue model being what it is right now, the revenue model, there is a contemplation of the revenue model being shifted to when the investors have to pay. So let's wait and watch if indeed that happens, and what kind of impact does it have on the business model for CARE, ICRA, CRISIL, all of them listed, by the way, so therefore become very, very important. Anyways, we'll talk about that a bit later on. The next piece, Bank of Baroda has initiated a forensic audit into loans extended to DHFL. This comes after the Finance Ministry sent a letter asking the bank to do so. The housing finance company has recently been under the scanner after Cobra Post alleged that the funds were rerouted to promoter entities. Vishwanath Nair joins us right now with the details. Vishi, what's the probe going to look into, and has the Finance Ministry only written to Bank of Baroda? I presume this is sources who you have spoken to and who have confirmed this piece of news to you.
Yeah, so what our sources are telling us at this point in time is that the letter went to two banks, Bank of Baroda and State Bank of India. These are the two banks with the largest exposure to DHFL. State Bank of India, according to the Cobra Post report, is about 11,650 crore, Bank of Baroda about 4,400 crore. Both banks have said that their exposures are broadly in line with these numbers. So, considering these are the largest exposure lenders, the Finance Ministry asked them to conduct a forensic audit, just to ensure that the loans that were given for a specific purpose were used for that legitimate business purpose and not to reroute as is being alleged in the Cobra Post report. The company has steadfastly, said that they have not misused any funds that they have received from the banks. Their audit committee is supposed to come up with a response to the allegations in a few days now. So we'll know about that. But essentially, Bank of Baroda has appointed KPMG to look into the loans that were extended by Bank of Baroda, the 4,400 crore odd loans. And they will find out if the funds were used for the reason that they were originally borrowed from Bank of Baroda. So that's precisely it. Whether the rest of the consortium, by the way, Union Bank of India is the leader in the consortium to DHFL. They have been in the market looking for an auditor for the last few days. So once they find out, we'll get to know in a few days whether Union Bank of India and the rest of the consortium joins Bank of Baroda with KPMG. Or whether they will do some kind of a separate audit. Those points are not clear yet. We'll get to know that in a few days. So once that happens, then we'll know whether KPMG is supposed to look at only Bank of Baroda's exposure or for the whole consortium. Okay. So these points will get clarified, I hope.
One hopes so too. And that's not just the end, right?
Yeah,
I mean, the CEO has resigned.
Yeah, so last night there was an announcement to the stock exchanges saying that Harshal Mehta, the joint MD and CEO of the company, he's resigned from his position as a CEO. But he continues to remain on the board as an executive director for the retail lending business of the company. So, that's an important development considering the company's already been in so much, it's been in the news for so many different reasons. And now you have the CEO, resigning from his position. We've also seen some other board exits from DHFL's board. Plus they have introduced some new independent editors, so independent directors. So we'll see, how the composition of the board changes. But as of now, Harshal Mehta's exit is an important news element.
Yeah, that's what I thought. A double whammy of sorts, right?
Yeah.
The forensic audit plus
a CEO resigning.
The CEO resigning.
Yeah.
So they've been trying to maintain a brave face, but somehow this piece of news flow, at least on both these counts, not quite holding up. So. That's interesting. The next piece that I just want to talk about, maybe Vishy has a comment on there too, but the other piece, Vishy, thanks so much for this.
Yeah,
but remember, the next piece and a really important piece of development from markets perspective as well as from a banking perspective, is that the Reserve Bank of India found no divergence in reporting of bad loans and provisioning by Yes Bank for the year ended March 2018. That risk assessment report, Central Bank's risk assessment report, observed nil divergences from RBI norms. This, remember, comes after the private lender reported higher bad loan ratios for 2 straight financial years after the first assessment in FY16, where RBI found the divergence at over 4,000 crores versus reported numbers less than 1,000 crores. So that was for that same period. Again, in FY17, the central bank found a divergence of 6,355 crore rupees. Leadership too came into question after RBI pointed out these discrepancies as well in the way it reported NPAs. In fact, as everybody knows, there's a leadership overhaul that has happened at Yes Bank too. So very, very interesting. Before I talk about what brokerages have said here, Vishy, quick thoughts. I mean, this is, a lot of people will say, hey, this had to happen. But frankly, it is a bit of a positive surprise.
I mean, so it was a surprise when the first 2 financial years there were divergences, because the expectation was it's a new age private bank. The book should be clear. There shouldn't be any divergence. But the divergence is essentially a difference in opinion between what the bank believes is a bad loan and what the RBI believes is the bad loan. So those differences exist all the time. But if there are nil divergences, as the bank claims, typically if the divergence is more than 15% of what your reported number is, then you're supposed to disclose it. They're saying there are nil, so maybe the RBI did not find anything in FY18. But still, you still have a leadership change coming in. You have Ravneet Gill joining next month. Taking over as a CEO of the bank. Not sure about Rana Kapoor's association with the bank, how it will continue, whether he will continue on the board or not. Those points are still pending. But as of now, good news for Yes Bank for sure. Yeah,
fabulous news. Vishy, thanks for that. And brokerages, by the way, have come out and given their verdict too. So I looked at 3 notes. I mean, frankly, could look at many more, but 3 notes. Macquarie, Motilal Oswal, SBI Caps, etc. And all of them positive. Macquarie says that the worst seems to be behind. Jeffries, the note is not too negative either. And Motilal Oswal is saying that, yes, now finally he's made a compelling statement to the market and to the investors and all the skeptics about the compliance practices. This is their terminology, of course. That's this nil divergence. The fact that it's come in after months of to and fro and speculation on the magnitude of the divergence that it was expected to report, this obviously is positive news. And for the day today, there certainly should be optimism with the developments going ahead, and once Navneet Gill takes over, if indeed there is smoother functioning, then maybe there could be more in store as well. So let's wait and watch. I must note out here though that when Navneet Gill's appointment happened, the stock was at about 204, 205. That very day, the stock went up about 20%. The expectation was that the P multiple re-rating could happen. That lasted for a really short period of time before the stock again came back. This is positive news, yes. It may last for a day, it may last for two. You don't quite know what will happen. Keep in mind that from a market's perspective, not just Yes Bank, a lot of other corporate-facing banks, the last 1 month have actually come off quite rapidly. SBI, ICICI Bank and others have lost 10% in the last 1 month. So all is not well with the banking space right now from a market's perspective. And keep that in mind if you're indeed thinking of Yes Bank as a trade or as an investment. Just be mindful of that. Vishy, thanks so much for being with us all through this news flow. So DHFL and Yes Bank, two financial names firmly in focus. Quickly move on to the next piece. R. Venkatramanan came into the limelight when the Tata Trust exerted its ownership over Tata Sons to remove Cyrus Mistry. The managing trustee and Ratan Tata's trusted aide has since stayed in the limelight. Sajit Mangat joins us now to talk about why the managing trustee's position yields so much power over Tata Sons. Sajit, good evening. For the uninitiated, good morning, sorry. I'm thinking evening because we spoke about this last evening. For the uninitiated, this might not be that big piece of news, but this is important.
That's right. If you look at from a Tata Trust point of view, that's a entity which controls Tata Sons, which is the corporate entity. Tata Trust is not a legal entity. It comprises of multiple charitable trusts, which mainly Saurabh Tata Trust and Sir Ratan Tata Trust, which have a larger chunk of stake in Tata Sons, and through that it yields power into Tata Sons and to Tata Sons into various Tata entities. Venkatramanan was the managing trustee, which basically means that he was handling the day-to-day affairs of all the trusts, and he was a full-time official of the trust. In the last 1 to 2 years, ever since the Cyrus Mistry thing happened, he has been in the limelight with respect to the functioning of the trust. There have been many cases filed. He himself has filed a defamation case against Cyrus Mistry in the Bombay High Court. There has been multiple, there's even a CBI FIR which has been filed against Venkatramanan with respect to Air Asia, where he was on the board of Air Asia, and those things have ensured that he's on the limelight. In the last couple of 6 months or so, we have seen some adverse news coming in for various trusts, whether it's with respect to tax concessions that charitable trusts enjoy over because of the nature of work they do, or with respect to violations of the act which is there. Now charitable trusts come under under the state government and not the central government. It's under the charity commissioner which comes in. So those things have been in the limelight, and of late there has been a murmur in Bombay House and others that there's going to be a big change happening at the Tata Trust level, and that's primarily one of the reasons being to ring fence all the charitable trusts, because too much of focus is coming on the managing trustee and the cases which are coming up on that. And the second one is to ensure that there is some kind of succession or continuity within the trust, and that's why we saw Noel Tata finally coming to Sir Ratan Tata Trust as a trustee there, and that brings in the Tata name also into it. So while Ratan Tata is heading the Saurabh Tata Trust, now Noel will be the trustee for the Sir Ratan Tata Trust. So together there will be some kind of Tata name behind it. Now what they're trying to do is they're trying to corporatize this entire trust structure in some way. They are going to appoint a chief executive for the trust who will manage the day-to-day. Now remember, they have a huge amount of charitable work which they do across the country, whether it's setting up hospitals or education institutions and other stuff which they have been doing, and it requires it's almost requires like a corporate structure for funneling all the CSR money of the group and putting it focused into various activities. And that's where some of the violations may have come in, and that's the reason Venkatramanana has opted to step down. There was buzz for last 1 week that he's going to step down. He may. So and that the board has already accepted it in yesterday's board meeting that okay, we are going to allow you to step down. That's a confirmation of it. But yes, it's a transition which is happening. There's some more strengthening of the trust which is going to happen, so that there is no it's a ring fencing of the trust which is happening as of now, because they don't want a situation where more violations come in, and if violations come in, the charity commissioner can take over the trust.
Yeah, which is not something.
if charity commissioner takes over the trust, then he appoints his people on the board of Tata Sons, and as a result of it becomes like a nationalization of Tatas, right?
Yeah, that would be quite something.
That would be quite something. Yeah. So to avoid that, remedial measures, I would say these are the remedial measures which have been taken by the trust to ensure that the trusts are ring fenced and they follow highest governance standards.
Okay, Sajid Mangat, thanks so much for putting that into perspective. Important business development, and as I said, well, no immediate market impact per se, but important business impact for sure. Okay, speaking of markets, the last piece on First Word today is on a space that isn't quite doing well. Auto sales witnessing a slowdown, not only in India but across the world. Economic factors coupled with tighter regulations and emission norms are taking a toll on automakers, and that in turn is hurting equipment manufacturers with muted demand for vehicles. There are not many takers for auto parts either. Yatin Motors standing by to look at the auto ancillary companies' businesses and the possible pulls and pressures on them going ahead as well. Yatin, good morning. In all this talk about what's happening to Eicher and Maruti and others, we forget that there are very large space of stocks which have been really under pressure to the auto ancillaries.
Yeah, clearly. So if there is a slowdown in auto, clearly auto ancillaries are something which would suffer in terms of the business opportunities, and because of the lower operating leverage, the margin and profitability. Now, we were looking at the 4-5 auto ancillaries, and they are on your screens, from Motherson Sumi to Bosch to Jamna Auto. All of them are in the red on a year-to-date basis, and more importantly, a 40 to 50% fall on an average for all of these stocks. Motherson Sumi Bharat Forge falling 40-50% from the 52-week high, and similar is the case with smaller auto ancillaries and specialized auto ancillaries like Jamna Auto as well as Varroc. We will analyze each of these, one by one, given the fact that every auto ancillary has their own story. So, for example, if we start with Motherson Sumi, if you look at their key customers, they are facing demand pressures. So, key customers include the likes of Volkswagen as well as Daimler, as well as Ford. All of these companies, contribute to nearly 20 to 30% of Motherson's consolidated earnings. And probably, if there is a weakness in terms of the demand for all of these, there could be some ripple effect on Motherson Sumi as well. In fact, if you look at the European auto, growth, that has slowed down from a 8% CAGR few financial years back to almost a flat growth in FY18 and calendar year 18. Clearly, the demand in European Union has been slowing significantly for reasons ranging from diesel car issue to Brexit. Of course, the silver lining being that Vivek Chand Sehgal, when he spoke to Bloomberg Quint, he said that he has set up new plant in US, Mexico, and probably that will contribute to $1 billion in revenues moving ahead. But that factor clearly fails to cheer up the market sentiment. The stock is at a 52-week low. Bharat Forge again, they came out with earnings yesterday. The management is hopeful that, there could be some growth in the US markets as well as domestic market. But Class 8 truck orders have been witnessing significant amount of slowdown. If you look at the Class 8 truck orders, they have been down 86% year on year in Jan. More importantly, 20% of Bharat Forge revenues comes in from the Class 8 truck segment, which is the multi-axle truck segment. And because of that, we are looking at some analysts who have cut the estimates on the basis of Class 8 truck order inflows as analyzed by FTR. And finally, third quarter shipment tonnage, which was expected to grow 10%, has grown in single digit, and more importantly, it has declined by 3% on a quarter-on-quarter basis. So that's the story for Bharat Forge. If you look at Bosch also, their EBITDA declined by 6% on a sequential basis. That was a 30% decline in their earnings, and more importantly, the mobility solutions business that saw flattish growth in third quarter. Of course, the management does believe that BS6, which is the new emission norm, and more importantly, the electric vehicle segment would get in some fillip to the earnings. However, they were slightly cautious on the fourth quarter earnings as far as the conference call was concerned. Jamna Auto, again, one of the important auto ancillaries, has very strong market share for specialized components in the commercial vehicle segment. And if you look at the SIAM data, Jan, December, November, last 3 months we are talking about, the sales have fallen significantly. In fact, if you look at the month of December, 21% sales decline for medium and heavy commercial vehicles, 11% in November, and January was rather flat. So clearly, Jamna Auto being a key component maker for commercial vehicles, that doesn't augur well. Stock 50% down from the recent 52-week high. And finally, Varroc, it's a key auto component maker for companies like Bajaj Auto, Hero, so on and so forth. However, if you look at the two-wheeler segment, we have been hearing from FADA that how really the two-wheeler inventory is at 60 days. And clearly that is putting pressure on production. And if the production slows, clearly the demand for auto ancillary and auto parts move down. And probably that is the reason why stocks like Varroc, which have recently listed, they're also off 40-50% from the recent highs.
Okay, watch out for these names as well. They've been under pressure. Let's see if the pressures continue, or is there a demand pull that brings these stocks out of the slumber. Yatin, thanks for putting that into perspective. Mind you, this is a select list, not exhaustive in any way, but some of the most important auto ancillary companies that we believe we should have spoken about because of the kind of price fall that has happened. That's all that we have on First Word today. But remember, lots more lined up on Indian Open. A bunch of stocks that we'll talk about, of course, including Yes Bank and Dewan Housing. But later on, conversations on JSPL, the revised steel production and sales guidance for the current financial year. We discussed the rationale with Mr. N.A. Ansari, so that's an important conversation coming up. From ILFS to Dewan Housing to insurance companies, there are quite a few pressure points in the financial space. We talk about the stress with Avinash Singh of SBI Cap Securities. He joins us a bit later on. But after this break, a full tilt towards the day's trade.
Indian Overseas Bank, the commitment, the recognition, the passion, the trust and excellency since 1937. Indian Overseas Bank celebrating 82nd Foundation Day. Good people to grow with.
Today we're meeting Royston Abel, Theatre Director. Royston believes you don't need words to tell stories. There is no way to describe what Royston does, because what Royston does defies definition. Can you say that about anyone else? To be so fiercely individual, yet create music and theatre so accessible, so easily understood and felt and appreciated, not just at home, but the world over. When he turned his eye homeward, he created shows that travelled the world, bringing it a glimpse of our culture. The Manganeer Seduction, the Manganeer Classroom, 100 Charmers and the Kitchen. Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching Indian Open right here on Bloomberg Quint Live. Good morning, Neeraj.
Good morning, Devina. A bunch of stocks in focus today. I mean, it's a packed day.
Yeah.
While the markets may start off flattish, from a Yes Bank to a Dewan to a bunch of results, a lot of promise of excitement on Open itself.
Yeah, Yes Bank in particularly, considering how it sold off to about 170, whether this, this divergence report has any bearing on the stock price, and whether or not we do see a bigger upside this morning on Yes Bank to take it, to propel it higher, something we'll watch out for. But the setup, at least for now, seems to be slightly more subdued. SGX Nifty is trading softer this morning, about 1/3% given up. Last 4 straight days we've lost out. The index itself is not being able to hold on to that 10,800 mark. In yesterday's session, we closed below 10,800. That's a psychological mark, so we'll see whether or not that pressure builds up in today's trade or no. Individual stocks is what we're going to be also watching out for, like Neeraj highlighted. But let's take a look at what happened in the futures and options space after yesterday's crackdown in the last 1 hour of trade. Agam Bakil is joining right now with an update on that. Agam, good morning.
Good morning, Devina. You put it rightly. We are seeing subdued cues coming in from markets, and it's nothing different for the futures markets either. So we are seeing some increase in OI towards shorts for the Nifty banking futures, also seeing an increase of open interest as much as nearly 5%. Now, your India Volatility Index has remained restrained, in fact, rather restrained between 15 and 16. And as I've been talking about, it's been very sticky around there. And moving on to your open interest distribution range, as well as a 300-point range. But what is it that we saw yesterday? Where did we see that change yesterday? We saw a little more writing around the 10,800 and 900 calls. But let's move in and talk about your Nifty put call ratio. Of course, that also came off to a certain extent. Among stocks which are in the F&O ban, Adani Enterprises, IDBI Bank, Jet Airways, along with the 2 of the ADAG companies, Reliance Capital and Reliance Power, are in the F&O ban. Jain Irrigation is a new entrant in the ban. On the other hand, Diwan Housing Finance moves out, but we do have a lot of news surrounding Diwan Housing Finance. So should we see a spike in its open interest, where it could very well go back in to the F&O ban? In terms of stocks, I'm keeping an eye on Power Grid, Nalco and Bosch, which were under pressure on account of increase in open interest towards fresh shorts. And in terms of unwinding, save for a couple of ADHE stocks such as Reliance Capital and Reliance Power, there was unwinding coming through. Page Industries and Apollo Hospitals saw a bout of short covering. Can we expect to see that strength maintain? Well, that's a wait and watch, but mixed cues nonetheless, and something that has been a continuation of a trend.
Right, Agam. Thanks very much for that. That's the F&O setup this morning. Let's bring in Parthiv Shah, Director at TRACOM Stockbrokers. He's joining us on the show this morning. Good morning to you, Parthiv. I want to kickstart this conversation with Yes Bank, nil divergence from the RBI report. Is that a big leg up on the stock?
Good morning, Devina. Yes, absolutely. I think these are set of very, very positive news. And at a point in time when we know there is a lot of now clarity about the new management, he comes from fantastic pedigree of Deutsche Bank. And I think more importantly, not that I'm trying to say by any means that, with this news, we will see the past glory days in terms of the stock levels of 290, 350. But I think certainly this is a very, very big relief. And the only reason why I'm saying that the stock might not massively re-rate because of still one more overhang, which is, I think, how well is the bank in a position to raise further capital, because the capital adequacy levels are at historical lows. And historically, this bank has grown fantastically well on its ability to raise funds. And I think even raise funds and maintain equity despite doing huge chunks of QIP. So I think that's a slight overhang, but certainly I think this news, in my opinion, certainly brings a bottom to this stock at levels of currently what is hovering at 168, 175. And I think people who can take some risk, I think at even levels of 10% upside from here, and willing to wait out for the new management strategy to play out over the next 3 years, this can be a huge alpha creator in the banking space.
Parthiv, good morning. So, Yes Bank, there is positive tailwind. The point being, some of the other private sector banks and corporate facing banks have been coming off in the last few days. Axis, ICICI, SBI, all of them are down. Maybe not Axis, but ICICI and SBI are certainly down over 10% in the last 1 month. So this relative, on a relative valuation basis, is Yes still a better bet, or would you look at ICICI or an SBI?
See, Neeraj, my sense is that it all depends upon one's risk-taking ability, because I think there are some players in the market who want that additional alpha for which they are willing to take that additional risk. No doubt, I think it's not fair to compare a franchisee like that of Axis, ICICI after the turnaround and the good results we've seen with that of Yes Bank, because I think in terms of the balance sheet size, in terms of the subsidiaries, I think there's a huge difference. But if one wants, safety, and especially after the correction in what we have seen in ICICI Bank, and I think still decent returns because of the fact that, even at current juncture, a bank like ICICI Bank is quoting at around 1.8 times price to book multiple. Yes Bank is quoting at somewhere around 1.3, 1.4. There are better chances that over the next 1 or 2 years, ICICI Bank could be an outperformer to that of Yes Bank because of the capital raising issues that I talked about. But we have a lot of faith in the new management for Yes Bank. So it all depends upon one's risk-taking ability. If one has to pick just one stock and not taking much risk, then of course ICICI Bank or an Axis Bank or a Yes Bank makes better sense.
The other one is going to be Diwan Housing Finance. It's not out of the woods at all. In fact, Bank of Baroda now looking at a forensic audit for DHFL's loans. How big a negative is this for you? And you know, if anyone holds a stock in the portfolio, I mean, while the stock has already come off quite significantly, is it time to just take losses?
See, Devina, frankly, unless and until I think this is a takeover candidate, I don't see a reason why the existing shareholders should be landing up holding the shares. I think now it's a tainted company, and generally we have seen historically, I think any company which has such spats of corporate governance issues and so much of con call that the management has done, they try to kind of calm down the nerves, yet the secured bonds are quoting at a 30-40% discount. I think it's going to be very, very difficult, and probably we've seen generally in such cases either the company drains further value for the shareholders, or I think even if a takeover were to take place under any circumstances, then it will happen at a lot lower valuations than even probably the prevailing valuations. And yes, one might argue that, you know, if one is to look at the price to book multiple, it's more like some of the PSU banks, you know, I mean, on the face of it, the price to book multiple looks very lucrative. But then if you look at the adjusted price to book multiple, we still don't know what sort of hidden loans are there. So in such uncertainty, I think even if someone's still holding it, expecting for a bounce, I think it's going to be a very painful journey. So I would totally avoid this.
All right. Stay on with us, Parthiv. Lots more stocks to discuss with you. But in the meantime, our research team is here with us. We're going to talk a little bit more about stocks reporting numbers today. So you've got ONGC, United Breweries is going to be in focus, and a few other stocks that are in the news that could see a move in trade today. We'll start off with you, Mishika, first on some stocks and news.
So these are the stocks that will be in focus today. Let's start with earnings. Fortis Healthcare came in with a weak set of numbers on the basis of low occupancy. They had their diagnostics business showed a sales growth of 2%, which was disappointing compared to their peers. Higher finance costs and one-offs impacted their earnings, one of them being an exceptional loss due to impairment of goodwill and impairment of closure of one of the hospital facilities. Lemon Tree came in with a strong set of numbers. Their revenues were up 8.3%, net profit was up 39%, EBITDA was up 15%, and margins therefore were up at 34.2% compared to 32.3%. Quick Heal Technologies also came in with a strong set of numbers. Their revenues were up 3.6%. Their net profit was up 2 times. EBITDA was up 59% at 21 crores versus 13.2 crores, and margins were up at 13.9% versus 20.8%. NBCC came in with a weak set of numbers. Their revenues were up 29%, net profit was up 22%, EBITDA was down 16%, and the other expenses were high, up at 66%, which led the margins down to 2.9% compared to 4.5%. Interglobe Aviation says 49 of their flights were cancelled yesterday. They will be curtailing their schedule for the remaining of the month of February, and the curtailing will be done by around 30 flights per day. ABB India's board approves segregation of their power grid business from the rest of their businesses. And the last one being Diwan Housing, wherein Harshal Mehta resigns from the post of whole-time director with effect from yesterday, but he will still continue to be the executive president of their retail business starting today.
All right, Mishika, thanks a lot for that. ONGC is going to be in focus. Numbers?
Well, yes, not sequentially not a strong set of numbers that we're expecting from ONGC. Now, if you see the headline numbers for ONGC, the revenue of the company is expected to be down by nearly 3% to close to 27,000 crore rupees, while the EBITDA is expected to decline by nearly 6% to close to 15,000 crore rupees. Margins are expected to contract to 54.6%, while the company's net profit is expected to be down by nearly 9% to close to 7,500 crore rupees. Now, the net realization number is expected to come in at around $66.83 per barrel, and that is because the crude oil prices were weaker in the third quarter of financial year 2019. Now, if you see Brent crude, that averaged around $68.8 per barrel versus $76 per barrel in the last quarter, and that's the reason why the quarter is expected to be weak for ONGC. Now, other than the weaker oil prices, a lower other income and higher depreciation could also weigh on the company's bottom line in the third quarter. However, some of these negatives will be offset by a weaker rupee, higher LPG prices and higher gas prices in the third quarter of financial year 2019. Now, gas prices were higher by nearly 10% to close to $3.36 per million British thermal unit, and that could aid the company's financials in the third quarter. And on the operation side, if you see, the crude throughput, the crude production and gas production are expected to remain flat, while on the sales side, the gas sales could be higher on a sequential basis in this quarter. Also, the interest cost for the company could be lower in the third quarter because the company has been repaying the debt that it had taken to acquire HPCL. Lastly, key things to watch out for from ONGC earnings would include any clarity on the subsidy burden, oil and gas production volume numbers, development plans of the KG Basin, the capital expenditure plans going forward, and any updates on the debt repayment that they have been doing that they had taken for the HPCL for acquisition would be keen things to watch out for. Along with that, the company will also be considering interim dividend today, so that will be also one of the key things that the investor would be watching out for from ONGC earnings today.
All right, thanks a lot for that. United Breweries is the other big one they're going to be watching out for. Two reasons, one with the kind of news reports that have suggested that the ED is looking to sell Malia's shares that are attached to United Breweries, which is probably most likely going to be a big leg up for the counter. And the other is its results.
It's earnings today. Absolutely. I think the more interesting development here is with respect to the ED, which has suggested that it may allow banks which are holding Malia's shares, which have been attached, to be sold after a court note. That is shares that Malia holds in United Breweries. Now, as per according to the details of it's about 4.1 crore shares of United Breweries which has been attached, which comes up to roughly equity of as much as 15%. And from what we understand is Heineken, according to reports by Economic Times, suggests that Heineken has shown interest in buying shares at a premium even, and this will also let Heineken claim shares in with respect to buying them. Now, should that happen, Heineken, which currently owns around 44% in the company, their shareholding will certainly rise considerably and significantly. And of course, that means, we'll have to wait for more of those implications. But at this point in time, given the fact that the Enforcement Directorate is open for selling those attached shares, or rather open to allowing banks, which is a consortium of State Bank of India, along with a bunch of other banks, to be sold into these markets, and that that Heineken is interested in buying shares, could be a leg up in today's day of trade. And of course, we'll be keeping an eye on earnings as well.
All right, thanks a lot, guys. A lot of stocks there to keep an eye out for. Parthiv, just comment on United Breweries, and how big a positive is this according to you?
It's indeed, I think, very, very positive set of news, because I think Heineken is probably, if the source-based news were to be true, is talking about giving a premium to this stake. I think, which is amazing, because I think this shows how bullish they are on the Indian markets. And I think, yes, with Vijay Mallya's stake going off, I think it's a huge overhang getting away. And I think we've seen similar split of news in United Spirits, McDowell's, I think, wherein continuously we were seeing that Diageo was upping its stake, and each time I think the offer that they were giving was higher and higher, and which led to a massive re-rating of the stock, even at a point in time when the balance sheet cleanup was taking place. So I think this is very, very positive, and despite currently a little expensive valuations, we might see further re-rating because of the premium that the market is willing to give to a clean MNC sort of a management.
Well, interesting. Do watch out for UB, the results out today as well. So that's the other important trigger to monitor as far as United Breweries goes. Just a quick thought on one set of numbers that came out. We'll talk about a bunch of others too, Parthiv, but do you look at Quick Heal as a business? And if you do, what did you make of the results?
See, I think Neeraj, yes, I do track Quick Heal, and no doubt, I think if we talk about the potential, it's immense. But the only concerning factor for me in the cybersecurity space is the disruption. We are seeing in places like the Western world a lot of artificial intelligence-based cybersecurity programs are coming up, products are coming up, and probably I think the disruption that one can see over the next 2-3 years, and Quick Heal's ability to spend in terms of the R&D vis-a-vis many of its larger MNC peers which are existing in the Indian markets and have huge scale, I think worries me at times. So I think my sense is that, we don't have much options to play this segment in the market. And I think irrespective of the results, I think I would avoid this for a longer horizon.
Okay. Watch out. The results were very positive. Let's wait and watch what happens to Quick Heal today. The other, of course, remember, while we talk about companies that have or are in focus today, and we'll talk about them, a bunch of stocks that will come out with results would be important to noticeably Page Industry, Ashok Leyland. So that's something that you should monitor as well. However, it's time to get in our technical experts on board. Parthiv, stay on, lots more to talk about. Brijesh Singh, Senior Technical Analyst at StockAxis, with us on the show, as is Brijesh Bhatia, Head of Research at Dealmoney Securities. Gentlemen, both of you, good morning. Thanks so much for joining in. Brijesh Bhatia, let me start off with you first. There might be a bit of a confusion today between the two Brijeshes, but Brijesh Bhatia, let me start off with you first. What's your index strategy for the day today? We are likely to start off about 30-35 points lower if the SGX Nifty is to be believed. Would you initiate a fresh short here? Would you stay put, or would you use options?
I think we have already seen markets been correcting around 300 points from high, and I think I would slightly go long around 10,700, 710 on the spot level. Because if you look at the recent rally, the reciprocal AB equal to CD, which was the previous fall, is equal to the current fall, which ends at around 10,710 around. So I think I would go long, and even if you look at the short-term charts, hourly charts, as well as 30-minute chart, there it's more into now the oversold territory. So I think we might continue in the 10,650, 670 on the downside and 11,000 on the upside range for February. So I think at lower level, one can look for a buying opportunity back for the target of around 10,810 to 10,840 on the upside on Nifty. So I would be slightly long at around dip around 10,710.
Okay. Brijesh Singh, what would your index strategy be for the day today?
Good morning, Neeraj.
Good morning.
See, no doubt from Jain till right now we are in the mid of the Feb. Nifty has been trading in a narrow range, say 10,650 or say 10,600 on downside, followed by 10,950 on the higher side, or say 11,000. Anyhow, if this range has been broken, say another 100 point or 150 point on upside or downside has been seen. So somewhere around 10,550 is a very crucial level for a Nifty to continue on the higher side for the medium term time frame. If that thing has been broken, then we might see a massive sell-off. So for a very short-term time frame, this 10,650 and upside 10,950 has been acting as a range. So as a trader, one can sell at the higher level and buy at the lower level. But right now, what the hourly chart or the shorter time frame of the chart are suggesting, that still there is a sell-off of say 100 point or more than that. So taking up a Nifty spot value right now, Nifty spot value got close somewhere around 10,793. Anyhow, if we are able to open at this juncture or anything above 10,800, one can look out to go for a sell side with the stop loss of 10,860 and play for the target of 10,720. Even the target can be extended to the level of 10,670 or say 10,680 zone.
All right, let's take a look at a few stock ideas from our technical experts as well. Brijesh Bhatia, you want to start off?
Yeah, fine. Okay, so I have one short and one long. I would go short on Godrej Consumer. So if you look at the stock was trading in a narrow range, and we have seen 3-column point and figure breakdown on the last trading session. So at around 783 levels, 683 and levels, one can look for short opportunity for the target of around 640 to 622 on the downside, and keep a stop loss of 705. Second trade is on the mid cap, the stock called Lemon Tree. If you look at the stock, it was quite resisting between 68-70 for quite some time, and we have seen a couple of days consistently breaking strongs above 70 with strong volumes and convincingly close above the record level. So at around 72 half 73, one can look for buying for the target of 79 to 83. This was slightly for 2 to 3 weeks call, and keep a stop loss of the resistance zone, which was around 70, and look for 83 on the upside.
Okay. Brijesh Singh, what about your ideas?
See, I have two buy calls. One from a IT company, Hexaware. What I have witnessed is that the stock had bounced from a level of 308 and 310 zone, which was a recent swing low with increase in volume. So with the higher higher lows in the oscillator from in the shorter term time frame, which is giving a bullish sign. So somewhere around 365, 366. One can look out to buy this counter with a stop loss of 358 and play for the target of 380, 382. Time frame to hold this counter would be 2 to 4 trading session. And another call would be an Indian bank, as we have seen a pullback rally on a shorter term time frame. It's been forming a bullish wolf wave pattern. Even the oscillator front, if we check it out, it has been giving a positive divergence, which is making the higher lows, and where the price has been not breaking the previous swing low. So somewhere around, it's a conditional bet. If it trades below 216, one can look out to buy this counter with the stop loss of 208. Play for the target of 230, 232. Time frame to hold the counter would be 2 to 4 trading session.
All right, those are some stocks to watch out for. But on to our special segment, Bloomberg Edge, where we tell you about a pattern that the Bloomberg terminal has thrown up on a particular stock. Darshan Mehta is joining right now today to highlight the same for us. Darshan, what's the stock on your radar today?
Yeah, so we're talking about Axis Bank today. You've seen that the last 3 or 4 days have been really bad for Axis Bank. The counter has been corrected. The OFS is going on, and even though the institutional response was very strong, the retail response was not all that good. So it is indicating a sell indicator. Let me first explain what an MACD is. There are these two lines. It's a trend. It's a trend following momentum indicator, and shows relationship between the two moving averages or the prices. So I'll explain this in detail once the chart comes out. If the MACD line rises above the signal line, it indicates it's time to buy, and conversely, if it falls below the line, it's an indicator to sell. So that's the clue that you're looking at MACD. Now, if you're looking at what has happened, is the blue line has gone below this line here, which indicates that the MACD has thrown. Here you can see it. And volumes have also gone up. It's an indication that it's time to sell the stock. Now, if you look at the chart itself, you can come to know the last time this happened here, you could see the stock actually fell in significantly from levels of as high as 650 to 550. So there was a 100-point downtick that has happened. Now, clearly what we're seeing is that there is a downward trend that has started, and with the MACD line moving in below the signal line, it indicates that there is a potential to sell the counter. That's what the Bloomberg indicator is indicating. So that's a negative view that's coming in on Axis Bank.
All right, Darshan, how well has this worked in the past for Axis Bank?
So the success rate is pretty decent. Last 6 times the MACD came out with signal, 6 times were the success ratio, and proper indication, and the average return over the next 10 days was 4%. So the Bloomberg is indicating that if all goes well, you could make a potential return of 10% if you short Axis Bank over the next 10 days.
Right, Darshan. Thanks very much for that. That is Axis Bank, and that's the Bloomberg Edge segment there. Just want to come to you, Parthiv, on Jet Airways, and it's going to be important to watch out for the numbers of Jet Airways. Anything in particular that you would like to know in terms of what you're expecting from management commentary, or any specific number that you think is worth watching out for?
See, I think I really doubt that despite all their best efforts in terms of trying to rationalize cost, they have not paid salaries, and I think that's been like a huge overhang. And also, I think my sense is that probably what the street is waiting for is now a desperate situation where I think there's a change of the management guard, or I think someone with a stronger balance sheet takes over this company. And we know such cases, I think, at times can get delayed endlessly, and I think that's the only hope on which most of the existing investors of Jet Airways are hanging on to. We had seen what Etihad was talking about. At one point in time, Etihad had infused, I think, money at, if I'm not wrong, a ballpark calculation of 700, 750 rupees per share. And now I think the next round of funding, what they were talking about was like a fair value, according to them, of around 135 rupees. So I think still there's a huge possibility of a derating if a deal does not go through and they have to ground up many flights, and as such the issues with the pilots is there could be a lot of poaching, I think, because more importantly Interglobe Aviation is talking about a deficit in terms of the number of capable pilots, and I think a lot of Jet Airways pilot would flock there. So again, more and more situation and problems arising for Jet Airways. So according to me, I think this is a counter which is best avoided unless and until we have more clarity about change of guard.
Okay, well, let's wait and watch what happens in the session today to Jet Airways too. It's an important day for Jet, so let's wait and watch. Important day for Ashok Leyland as well, simply because the stock is trading at close to 52-week lows at 78 rupees. The numbers come out today. Can the numbers materially change the sentiment on this one, Parthiv? The stock has more than halved from where it was.
Neeraj, the problem is that the current market sentiment, we've seen companies where I think if not in terms of the volume growth, but even if they're delivered in terms of better margins and margin growth due to cost-cutting measures in such times, I think we've seen the stocks don't tend to get re-rated and come back to their glory days. I think unfortunately here is a segment which has grown fantastically well over the last 2-3 years, all on the basis of government capex and government spending. The tipper truck stays, even as per the latest data, were reasonably good, but now I think there'll be a lot of apprehensions in terms of, I think after 3 months there's going to be election, a lot of capex is going to be back-ended, and I think that delay could hurt the results over the next 2 to 3 quarters. So even I think their defense foray probably that could slow down, and it all depends upon how I think the elections also pan out for such companies, because we've seen if the incumbent government were to again win, then probably markets would not worry in terms of the capex cycle, I think slowing down, because it will be more like a continuing phase. But if there's a change in the government, then probably a lot of things can change for such companies. So I think at this juncture, no new entry points, but existing shareholders, I think, who are still making money on this over the past investments, I don't mind. I think if one were to exit even 50% of their position, taking some money out and staying in cash.
Okay, taking some money out at these levels and staying in cash. Did I hear you correctly? Taking some money out of Ashok Leyland right now and staying in cash.
Yes, Neeraj, I do believe that, and I think based on the commentary that I gave, I think it's more prudent measure to sit on cash, at least 50% of the position if one has in Ashok Leyland.
Okay, well, so mind you that people usually are afraid of or don't quite go and take these calls after the stocks have corrected 40-50%, but Parthiv believes that there is merit in taking some money off Ashok Leyland and sitting on cash. I'm guessing the thesis is that there is a possibility that Ashok Leyland as a stock could go down further, or there is certainly uncertainty which could take the stock down further as well. From a trade perspective, Brijesh, Bhatia, Ashok Leyland, it's a result day today, so it might be volatile today based on the numbers, but what does the trends indicate? Could there be more downside here?
Yeah, I think, he rightly said that one should take out money out of the table. I think from a trading point of view, 73.5 can be eyed at. But if I look at the positional chart, which has now turned very, very bearish, and probably 64 is the level I think stock can test on the downside. So still, which is around 20% from here as well. So from trading pad, one can look for short at around 81.50 with the strict stop loss of around 84, and look for the target of 74. But positionally, 64-65 could be the targets on the downside on Ashok Leyland.
Yeah, I think it will be important to monitor for people to monitor that stocks don't necessarily become cheap if they correct about 50% because in a cycle which turns adverse, and we are nowhere saying that the cycle has turned adverse or is really bad for Ashok Leyland, but in cases of cycles turning adverse, it's not just the top line growth that goes off, but because of the operating leverage working against, the margins take a hit, and therefore the earnings decimation is even more than what the top line growth pullback is, and that might just bring down both the earnings and then the P multiples as well for the forward years. So maybe that is something that is playing out in a bunch of these auto names. We were talking about the auto Ansaris as well, as we were talking yesterday on the show too. They too have been under serious pressure.
Well, rightfully so, and in an industry situation like this, a company that looks slightly more structurally weak takes a bigger knock.
Yeah.
So for an Ashok Leyland, the silver lining tends to get eroded there, if at all there is one. Ashok Leyland there at 78.9. We've got a minute, almost 2 minutes left to go from market pre-open. Yesterday's session saw an interesting move in the Adani group stocks, be it Adani Ports, Adani Power, Adani Enterprise. Brijesh, Bhatia, do you have a call on any of the three?
We have a short call on Adani Ports at around maybe around 343 rupees, and we are expecting a target of around 327 on the downside, and strict stop loss would be 349 on the stock.
The other interesting one, of course, would be CG Power and the kind of big fall that the stock had yesterday. Maybe we'll be able to talk to Parthiv about it only post-market open. Actually, because it's just less than a minute for the markets to kickstart trade. Also pertinent maybe to talk about it post-market open, because there could be a further reaction in the stock yesterday in today's session, simply because there are two factors. One is the development that has happened, and two, if indeed the pledges are revoked. A lot of securities notes suggested that this one has some seriously high pledges, and with the price falling, maybe, just maybe, there is pressure on that front.
There are various angles, Neeraj, and like we were seeing, a lot of asset management companies also holding the stock. Yesterday, the stock was down about 31%. At 22%, we raised the question of getting pledged shares revoked, and the stock closed actually 8% under that as well. So there is a serious chance of that happening, which could put further pressure on the stock, which is anyways down about 30-odd%. 20 seconds left to go for market pre-open. We'll see how the stock opens up for trade and get Parthiv's comments on the same. But the SGX Nifty looks a little weak. It's weakened further rather, and the rest of Asia too, no major cues coming out from there. So 33 points given up on the SGX Nifty, that's down 1/3%. For our markets, the pre-open takes on your screen. Remember, watch out for what happens in trade to the currency as well as the bond yields. Yesterday, you saw the 10-year bond closing under 7.3, so that's going to be interesting to see how today's setup is. But that's the Nifty 50 and the Sensex for you. Initial ticks, just the first ticks showing you a positive bias, and surprise, surprise, yes, Bank top gainer. You've got HDFC Bank also, which has moved up. So, but these are just initial price. Maybe this comes off as well. Axis Bank up 2.3%. Dr. Reddy's up 1.7%. You've got Reliance Industries moving up 1.7%. ICICI Bank is up 0.5%. Power Grid 0.5%. Sun Pharma, that's moved up too, and then you've got the likes of Titan, which is up 0.25%. So no big quantum leaps in terms of gainers. Amongst the bigger losers, you have Bharti Airtel, which is down 2%, Ultratech Cement, HPCL, Tech Mahindra, HDFC Limited, UPL. These are all losers coming in excess of 1% kind of cuts. Infosys is down 0.25%, BPCL is down another 0.25%. You had Brent crude touching 64 in yesterday's overnight trade. Crude oil prices moving up, doesn't all go too well in terms of for the currency moves as well. But today's session 70.99 is where the rupee has opened up for trade. Let's take a look at the 10-year bond deals as well and what they've been doing. So that's the currency for you, under 71. Yesterday's close was anyways under 71. Not done all that much. I think yesterday's close was close to a similar amount, 7.29.
Yeah, so bring up Diwan Housing. That's the other big monitorable in addition to Yes Bank, and that looks like it will. It has started off lower. It looks like it will probably be in the red. The quantum is the question mark. Let's wait and watch. CG Power, incidentally, another 7% in the pre-open session itself, and actually worsening. So let's wait and watch what happens to this one in trade. Stocks which are trading at 52-week lows, the likes of Himmat Singh Seed, Sterlite Tech, etc. Let's see if they are under further pressure in the session today. Himmat Singh Seed another 4.5% down. Sterlite Tech, well, for now marginally higher. Let's wait and watch if it manages to stay above. Quick Heal, very strong numbers, and let's see what happens. What's happened to that counter? 4.5% higher. And then Lemon Tree Hotels, which is the other one, which was also fairly decent set of numbers. For now, not reacting too much. Let's wait and watch if that lasts. Okay, before we move any further, let's get in Sumit Sarkar, who joins in the top brokerage calls of the day. Sumit, good morning yet again.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is UBS on India Energy Exchange. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of around 215. Now, according to the brokerage, the stock is attractive on all counts as it sees two key growth drivers for the company going forward, which include the growth in power consumption in India and market share gains that the company will see going forward. It also says that the key growth driver of IEX is also backed by a structural changes, that is growth in power consumption on the back of government's has pushed for electricity for all and improving financial conditions of state distribution companies. Lastly, it says that there are multiple other levers for the company for growth that would also aid the company's earnings and lead to high option value for IEX success, says the brokerage. Now, HSBC came out with this note on asset management companies. Now, firstly, on Reliance Nippon, it has initiated coverage with a buy rating and a target price of 270. Now, it says that the company is well positioned to grow in more profitable equity segment, and it believes that the AMC's spread out distribution is its core strength and will remain the core strength going forward, according to the brokerage. However, it does see that the intercorporate deposits that the company has will be a concern and an overhang on the stock. On HDFC AMC, it has initiated a hold rating with a target price of 1300 rupees. Now, it says that HDFC is a quality franchise with more focus on individual customers, but it has a hold rating on the stock because of three reasons. Firstly, it believes that the company will be impacted more than Reliance Nippon when it comes to the cut in the total expense ratio. Along with that, the second reason is the lower dividend payout when compared to its peer, that is Reliance Nippon. And thirdly, the valuations are expensive for HDFC AMC when compared to Reliance Nippon, and that is the reason it has a hold rating on HDFC AMC.
Right, Soumya, thanks very much for that. Yes Bank still holding its top slot of 10% in pre-open trade and not budged from there, but we'll wait it out for a few more minutes for confirmation. CG Power, and we were talking about this one, and Parthiv, I'd like to come to you with this this one. Yesterday's move, primarily on the con call takeaways of what the management said with regards to the group receivables and the adjustments being made there by the promoters to royalty for the future, which has been cut from 1% to 0.5%. But the future value of that royalty, brought down to net present value and being adjusted in the receivables is something that the market didn't really take too well. How did you read into this?
Absolutely, Devina, and I think this group, unfortunately, has had spate of, creating a mess in their companies. I think we've seen what they did with a fantastic asset like that of Balrampur Paper, which was the market leader. And now, I think in this company, what we saw in terms of, it's a big mess, because I think the Hungarian asset, since ages, I think in their con calls, they've been talking about monetizing that. That's a loss-making asset. They have almost advances of around 800 crores. And that advances to their intercorporate group, I think, has again been lent someplace else, wherein I think they're not sure. And as per their last guidance, that in Q3, they would be getting around 200 crores back. And that's not set in. I think the amount is a lot lower. So I think these are the things that the market does not like. And with promoter pledging, I think the last thing you want in such a market scenario. So I think nobody will care about how your industrial division, how your power division is done, or what sort of operational efficiencies are trying to kick in. I think these spate of, corporate governance, and probably this is not the only stock that one can invest into in terms of the capital goods story. I think there are a lot far better names, ABB, Siemens of the world. So I think whosoever are the investors, we are currently seeing something like a sentiment change, and we're seeing this stock being like a dumping ground. So I think does not bode well and best avoid it.
Okay. OMCs, Devina, correct yet again. So you were pointing them out, and those are certainly under pressure today. We'll talk about the trade bit out there too. But just since we are a topic of losers, and CG Power comes out there, Dewan Housing is the other one at 105 that is seeing pressure points on both the sides, on both those factors working out. So interesting what's happening to this stock as well. However, since we're speaking of losers, just a quick thought out here, Brijesh, Singh, is there a trade that one can initiate afresh on either BP, HP or IOC?
See, if I'm not missing, in HPCL somewhere has been quoting at 221 or say 225, and if I'm not mistaken, it has given an interim dividend also. Overall, the chart from somewhere around 255 or 260 odd level, the stock has been getting corrected, and now it's been trading in the crucial support juncture. Anyhow, if we are not able to give closing above 232 or say 235 level, there might be another sell-off, and which can take the stock to the level of 205 to 200 and odd level. So if someone wants to go for a short side, keep a stop loss of 235 and look for a target of 205 to 208 level.
Interesting to see how crude oil plays up. It's already at 64 on the Brent, and that's probably what's led to these oil marketing companies being under some fair bit of pressure. 907 right now and holding strong. I just need to keep focusing on Yes Bank for today at 186. It's not budged from that 10% mark, and hopefully, we'll wait and see as to what the opening brings about and whether or not it's just limited to 10% or you'll see that bigger move. Because I think people who saw the results and post the overhang of the new the head at the helm with Ravneet Gill coming in, they still held back a bit because they were waiting to see whether the divergence report has something to dole out or no. And now that too, which was the last twig, has been out of the way, will those hands come back in is the question.
Actually, you make a very pertinent point. The three decks are cleared, right? You have a CEO with pedigree at the helm.
Yeah.
The divergence report is a non-issue, and the valuations are certainly in your favor. The perceived valuations are certainly in your favor.
Yeah. So let's see. Let's wait and watch on the counter. Is there a trade here, Brijesh Singh?
I didn't get it. Which stock you've been talking about?
Yes Bank.
From 145 odd level, the stock has given a bounce back. Right now, the stock has been quoting somewhere around 169. Even on the shorter term time frame, the stock is not giving any promising sign. So it has a resistance at 180 to 182 juncture. So definitely, if someone wants to play for a short side, keep a stop loss of 180 and look for the target of 140, 145 juncture. But the problem is that if that thing breaks, then might be another sell-off rally which can take the stock to the level of 120 or 125 zone. So overall, the trend right now from a shorter term to the medium term time frame is little bit on the negative side rather than on the positive side. So one can go for a sell side with a stop loss of 180.
Wow. Okay. But there might be a tweak out there if the stock indeed tends to move well today. Lalitabh Srivastava, AVP for research at Sharekhan, joins us right now for a quick perspective on Yes Bank as well. Lalitabh, what's your message to your clients this morning? Yes Bank is at 186. For somebody who doesn't have an investment here, would you recommend going out and buying a Yes Bank after the divergence note is out?
See, this is a big positive for Yes Bank. And this was divergence was one of the key overhangs that we were viewing on the stock. The management change has happened. This was the first quarter. Q4 would be the first quarter when the new management would have reported. But the important thing was the divergence report that has come nil, or basically it is plus minus 15%. So within the tolerance level, I think that is a big positive. We currently have a hold rating on that, but we believe that we'll have a relook on the stock.
How much of a re-rating are you expecting for Yes Bank, Lalitabh? I mean, we've been talking about how people have been maybe refraining themselves from entering and waiting for the last call on the divergence report, which has now been cleared. So do you feel that there will be a rush to enter the stock?
I think, there is a significant discount that the stock is trading at from its historical levels, historical valuation levels. And even if the stock catches up some ground, you can see a significant performance there. Does that answer your question?
Yeah, yes, it does.
Okay, Lalita, appreciate. I'm guessing we'll wait for your note once you rework the whole thing and come out with a fresh target price as well. But thanks so much for joining us for this quick initial hit this morning.
Thanks a lot.
That's Lalitabh Srivastava of Sharekhan, believing that there is upside, and the stock is showing that. Brijesh is looking at the charts, but maybe those charts could get altered. We'll talk to Brijesh once again about this one in a couple of days as well. Not saying the stock won't react downwards, but let's wait and watch. For now, certainly looks like there are positive tailwinds. Should we quickly tell you all that you need to know to stay ahead in trade today? Okay, let's try and do that. ONGC, the last nifty company to report the third quarter results today. Oil and gas explorers' earnings may bear the brunt of lower crude oil prices, so do watch out for this one.
In earnings which came post-market hours yesterday, Lemon Tree and Quick Heal Technologies reported a strong third quarter, but NBCC reported an operationally weak quarter.
In another setback for Dewan Housing Finance, Bank of Baroda has initiated a forensic audit of loans given to the company following a finance ministry directive. This after news reports said that the company has rerouted funds back to promoter entities and the CEO has resigned. The stock down 6.5%.
Yes Bank has declared that the RBI compliance assessment report for FY18 found no divergence in the bank's asset classification and provisioning.
And the Enforcement Directorate may allow banks to sell Vijay Mallya's attached shares in United Breweries post a court nod, according to an Economic Times report.
All right, you've got about 1.5 minutes left to go for market opening. A quick call on the technical side. Brijesh, Bhatia on a United Breweries at 1400.
United Breweries. I think I would slightly wait for it. Maybe around 1330, 1340 could be a good buying level as of now, because if you look at the chart, it's been quite consolidating between 1450, 1460 and 1300 on the downside. So I would slightly wait for 1340, 1330 to enter along.
All right. L&T under pressure since the last few weeks at 1219. Brijesh, Singh, would you go long or short?
See, right now, yesterday's closing has been showing me 1216. So on the higher end, 1255, 1260 is the resistance zone. Whereas on the downside, anything below 1190, stock can even go to the level of 1150. So if someone wants to play for a sell set, any rise can be used for a sell with a stop loss of 1250 and look for the target of 1180 followed by 1155.
All right. Negative on L&T is Brijesh Singh. 40 seconds left. Top calls from both our technical experts this morning. Brijesh Singh, I'll keep it with you.
See, as I said, Hexaware looks good on the chart for a shorter term time frame, say 2 to 4 trading sessions. So one can look out to buy this counter somewhere around 365 or say 366 with the stop loss of 358. Play for the target of 380, 382.
Brijesh Bhatia.
Yeah, apart from short on Godrej Consumer and long on Lemon Tree, one can look for a short on BPCL at around 329, 330 levels. Strict stop loss would be 336 and targets could be at around 312 on the downside.
Okay, gentlemen, stay on. Here's how the markets are starting off today. Flattish. So the SGX Nifty was not completely bang on, but let's wait and watch if it changes. I think Yes Bank and a few other stocks might be having an impact on the Nifty Bank, but let's wait and watch. It might be short-lived too, you never know. But yeah, now about 0.25% lower for the Sensex, or hovering around those levels. The mid-cap and the small-cap indices very quickly to just get a sense of what the breadth might be looking like. Might not be looking all that positive, but let's give it some rope. The heat map straight away and look at Yes Bank right up at the top corner, 22% for Yes Bank. Well, this speaks volumes about how the market reaction is. As we've been saying all through the morning, the market was, despite the CEO getting appointed, the market was waiting for the divergence note. That has come out, and therefore it's a positive 24% for a Yes Bank, which is why we're saying don't quite look at just the recent charts. Let's wait and watch what happens here. Indiabulls Housing Finance, a bit of an ancillary move out there on that one too. Eicher Motors about 1% higher, so a bit of a pullback for that. But the larger breadth is negative. It's Yes Bank singularly, which has had this big, large move, news specific. Aside of that, the mood doesn't seem to be too sanguine, to be honest. The oil marketing companies continue to grind lower. HPCL in particular is down about 3%. HDFC Bank, IndusInd Bank, Kotak Bank, all down, which shows the pressure that might be there on some of these banking names today and subsequently on the Nifty Bank too. Reliance Industries is off too, and well, which is why when you have heavyweights like RIL and the HDFC Twins in the red, it's very difficult for the index to do anything more than be flattish or maybe marginally higher. But frankly, the man of the match today has to be Yes Bank, 27%. This is a move which is as high as the move was intraday when Ramneet Gill, the news about Ramneet Gill came in. Remember, that stock went up 27% in the last 45 minutes and then cooled off and just closed about 18% higher. For now, it is holding on to that 26% mark. Let's see if there is more in store here. So strong show for a Yes Bank in the session today. Devina, that's the takeaway from the index at least. Indiabulls Housing Finance is giving it company too, and naturally so. Yes Bank is the man of the match for now.
Yeah, from the broader market space, we're going to watch out for a few counters that were in focus in yesterday's session. CG Power that dropped 31% in trade yesterday, and how it opens up to trade this morning. Add to that 5% more of cuts this morning at opening. So that is CG Power for you. You've got United Breweries. That's the other one you need to watch out for. Positive news coming in with regards to the ED saying that they're going to sell Vijay Mallya's attached shares in UB, which gives Heineken an open window. And the stock, though, is not reacting a whole lot much. The numbers come out today, so you're going to watch out for that. Jet Airways is going to be reporting its numbers today as well, so you're going to watch out closely. Doubt anything will change materially. 219 on the counter. Aside from that, a few names that are working their way up. Equitas Holdings is one stock, which is up 2.3%. Indiabulls Ventures is up 2.6%. Trident has moved up about 2.5% in the session this morning. You've got Marico up 0.5%, Bajaj Hindustan up about 0.75%, Max India, LIC Housing, Muthoot Finance. Most of the NBFC names are doing okay. Future Consumer, that's up about 0.5%. Edelweiss was down 6% in yesterday's trade. Let's see whether that stock has seen any respite in today's session. No, that's at 122, losing another 4% in this session, so continues to grind lower. Amongst the other losers in trade, aside from the ones that we've already mentioned, Karur Vysya Bank, that's down 20%. Yesterday's session saw a cut of about 6-8% or so. They came up with their numbers. The market was not too pleased with that, but that's a really strong reaction to poor numbers that the stock has been receiving from the markets. It's 63 Karur Vysya Bank. You've got GMDC that's down 6%, NBCC that's down 4.5%, Take Solutions, Dilip Bilkon, the big mover yesterday, 13-14% higher. Today gives up a bit, so that's down about 3%. And Repco Home Finance is down in the session as well.
The texture is undeniably weak, you have to admit. Despite a Yes Bank big move, the markets are 0.25% in the red. Despite the world being okay, not too bad a place. But just before we thank our guests, two top losers, we already spoken about CG Power. Parthiv, any thoughts on Karur Vysya Bank? That's a steep, sharp reaction, 2 days on a trot now.
Unfortunately, I think it was horrible set of numbers, and probably it was a huge negative surprise because this is not something what one was at all expecting coming out of Karur Vysya Bank in terms of their SME portfolio and many of the verticals where they lend to, and probably I think the credit costs are going to skyrocket in the next quarter. So probably it's getting derated, and probably again when the stock goes down again, the markets are fearing how well will be the company be in a position to raise capital. So all of these are concerns, and probably we probably might not be surprised if we see a lot of institutional exits from this stock. So tough days ahead for this bank.
Okay. Parthiv, we'll leave it at that. Thanks much for taking the time out and being with us and giving us your thoughts. Really appreciate your time. Brijesh Singh, Brijesh Bhatia, thank you so much for being with us today as well on the show and giving us your stock recommendations too. Let's welcome in Fundamental Voice, Rajat Jain, CIO at Principal Mutual Fund, joins us right now on the show. Rajat, good morning. Thanks so much for joining in. Neeraj here. What's the texture of the market according to you? The last 5 days, there has been a divergence in the way India has performed versus the rest of the world is doing too. About 2 and 3% lower for the Indian markets. The rest of the Asia Pac, buoyed by the buoyancy in the trade talks, is up about anywhere between 2% to 7%. Any particular overhangs that might lead the markets even lower?
Yeah, morning Neeraj. Yeah, actually this has been a story so far year to date. Even if you see year to date, you look at MSCI Emerging Market Index, which is actually up, I think about probably in the high single digits, and Indian markets are down marginally in the MSCI. Just look at the MSCI India versus MSCI Emerging Market. And other emerging markets are up substantially higher. So that's been sort of the story so far this year. I think in India it's been more, if you look at if you sort of like slice and dice the various moving parts as it were. If you look at the earnings first, the earnings that we have had so far, I think more or less I think the top line has been, but for a few cases, like autos for example, there's been a clear slowdown. And for reasons I think that we all know, the top line for most companies has been reasonably okay. There have been a bit of pricing pressure issues in say things like cement and in some cases raw material prices, but then those are softening a bit. Overall earnings haven't been a major disappointment. I think more or less okay or slightly better than expectations. It's been, I think the flows domestically on account of concerns on issues with specific company-specific issues really, coming primarily from the fixed income market in terms of corporate governance issues and others. So there's been some impact on flows from the domestic retail investors, and overall, I think ahead of the elections in April, May this year, I think market slightly doesn't want to go heavy into the elections. They still want to go slightly light into elections. So I think so what's happened is the markets, I think you have good companies which are doing reasonably well, but the market, or mid-sized companies particularly, just punish them disproportionately. So as of now, the market's mood is to be slightly cautious, which I think is primarily as to what's playing as to the way the market is behaving, in contrast to what the emerging markets have done. So India has actually been an underperformer, as you rightly pointed out.
Rajat, good morning. Devina here. So what should the approach be? I mean, while we're talking about focusing on the long term, avoiding the noise created by the elections, global cues are also of importance, which will weigh in on the direction of the market. How should one approach things?
Yeah, that depends on where you use in terms of like what's your starting point. If you are looking for a say 3 to 6 month or a trading horizon, you look at it differently than a typical retail investor or a mutual fund investor into equities, who I guess is looking for something like 2 to 3 years sort of a time horizon. So just for a moment look at the mutual fund investor into equities. So what's really happened as of now, there's been such a flight to safety, quality. So you have this consumer goods company who have shown decent volume numbers, and but however available at something like 45, 50 plus sort of earnings multiples. Clearly they are great franchises, but and the valuations are quite stretched there. On the other hand, you have companies which are some volatility, not so much in their underlying businesses, which are still showing probably decent growth numbers. However, for some reason the earnings are not there. You spoke, we don't want to get into specific stocks. As an example, say you spoke about Yes Bank before I came on, and the stock is up substantially today because some sort of concern or the perceived concern that the market seems to have been resolved. So, it's not that the bank is a different animal today than it was yesterday. It's just that the investor behavior is what's driven this. So it's not. So I'll just step back a bit and say, are the companies doing something different than what they said they would do? So it's not so much about companies. It's really the volatility or the uncertainty is coming out of investor behavior, which is coming out of the environment that we are seeing around us. So if you're looking at a portfolio from not a very long term, say 2 to 3 year time horizon, I think you are getting good companies in the mid cap, in the large cap space, which are showing decent volume numbers, are run by good managements, care for minority shareholders in terms of return ratios and so on. And you're getting them in many cases at fair valuations. The markets have corrected, and in some cases the markets or the stocks have corrected disproportionately, simply because investors want to stay away from all kinds of risk. So I think that's giving an opportunity for investors, fund managers and others to pick and choose those stocks. Now, if you look at the trading, people are looking at traders. We really don't have great expertise in that. But I think the market's environment is going to be very volatile, certainly till the election, post the results and see how the government formation and all of that. I think that's going to have huge swings. That's going to lead to huge swings in the market. So it's difficult to call that. But having said that, I think as things settle down, even post-elections, ultimately, if we are seeing infrastructure growth, work actually happening. If you look at cement as an example, which plays into infrastructure, or you look at steel long products, they are showing good volume growth numbers. It's just the pricing has been under pressure in the case of cement, for example. Steel pricing was a pressure till end of December. They're beginning to see some of that recovery come through. So the volume growth is not a challenge. So whichever government is in place, I think those things are still going to continue to play out. And if you look at the RBI survey, on capacity utilization, the so-called Obicus survey, there actually the numbers are trending higher. So those are things, people are not going to stop. Okay, they may hold a bit for the new government to be in place before they start doing capex. So I think those things which are going to continue simply because the fundamentals are there behind you. So long answer, but I think you have to look past this volatility and then stay put for next 2 to 3 years, really.
All right, for the next 2 to 3 years. But, you know, even while you're picking and choosing what companies you want to invest in, Rajat, you know, you need to be very critical of the parameters you're using because, you know, while we're talking about a certain amount of growth on the markets, on the index, that growth is just propelled by a handful of 4 or 5 nifty stocks. And that's not a clear representation of what the rest of the market is actually witnessing. So in light of taking, you know, adherence to that, how would the approach be more, you know, in a way apprehensive if you have to choose stocks within the broader market versus the larger market? Because that's not a true picture.
Yeah, I think which is, so, you know, this can't continue. I mean, last year we saw this is more of that happening this year as well. As we saw last year, the high quality, well run, you know, companies in IT or financial services, banks, I mean, they primarily drove pretty much a couple of companies in the capital goods space. They drove pretty much all the entire market. I think 200-300% of the market growth really came from these companies. The rest of the companies were down. So, I mean, is that something that's going to be sustainable? No, it's not because the companies are it's exactly, you have to step back and see why is that? Is it because the companies are doing so much better than what the market, other companies in the markets are doing? Or because the investors are fearful, skeptical, want to avoid risk, want safety? Which of the two? Or companies are good? I mean, these companies which have driven the markets last year have driven the market this year, as you've just said. Or they are doing good, oh, absolutely, but are other companies doing so very badly? I mean, that's what. It's really coming out of the investors' mindset of looking for safety and so on and so forth. So as, you know, hopefully that event rolls over come May, post-election, and as just said, you know, whichever government formation A or B comes into power, there are some fundamentals which are going to remain, which is that people need to do capex. You are not seeing, say, for example, in the case of cement, which is hated as of now. I mean, it's not doing so very well. But if you look at cement sector, I think the volume growth we just spoke about has been good this year, despite pricing pressures. Not most of the country not having good pricing. But if you look at capacity creation next 2 years is moderate, like 4 to 5% CAGR next 2 or 3 years in terms of capacity creation, and demand growth continues decently. So something will come out in the cement sector. So, you know, yes, if you, as of now, all this volatility, the flight to safety, oh, absolutely, that's a fact, we know that. But is that something which is there for next 2-3 years? I would be surprised. For next 2-3 years, I think you'll do better by having a broader portfolio of stocks across sectors. Of course, looking at things like corporate governance, which we know, we always knew was important, now it's become even more important. I mean, the kind of, you know, issues that we have seen in terms of, you know, revelations on companies and so on, it becomes even more important to look at. But then if you're getting good companies at fair valuations, I think you should look at a broader universe of stocks than only the select, you know, 7, 8, 10 of those names.
Okay. Maybe sound words of advice, and hopefully our viewers will take them on board. Rajat, always a pleasure having you. Thank you so much for taking the time out and being with us today and giving us your thoughts.
My pleasure, Neeraj.
That's the view from Rajat Jain. Need to slip into a very quick break on news that the markets are lying absolutely flat. Karur Bank is down 20%, Repcom Finance another 7%. Stocks like NBCC are reacting to the numbers, down about 5%. Yes Bank is, well, that one stock which is actually trading well and truly in the green. Take a break, come back with a metals discussion. JSPL has revised steel production and sales guidance for the current financial year. We discuss the rationale with Mr. N.A. Ansari. And from IndianOpen to Diwan Housing, quite a few pressure points in the financial space. We talk about the stress with Avinash Singh of SBI Cap Securities.
Indian Overseas Bank, the commitment, the recognition, the passion, the trust and excellency since 1937. Indian Overseas Bank celebrating 82nd Foundation Day. Good people to grow with.
Today we are meeting Royston Abel, Theatre Director. Royston believes you don't need words to tell stories. There is no way to describe what Royston does, because what Royston does defies definition. Can you say that about anyone else? To be so fiercely individual, yet create music and theatre so accessible, so easily understood and felt and appreciated, not just at home, but the world over. When he turned his eye homeward, he created shows that travelled the world, bringing it a glimpse of our culture. The Manganeer Seduction, the Manganeer Classroom, 100 Charmers and the Kitchen. Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're still with IndianOpen. Steelmakers have revised their volume guidance lower for the current financial year. It comes at a time when construction activity usually picks up, and steepest cuts has been announced by JSPL as well. So is this a sign of slowdown, at least in real estate and the overall economy as a whole? Joining us to talk about this in greater detail is N.A. Ansari of JSPL. Mr. Ansari, thanks very much for taking out the time. How significant is this guidance cut that comes in, and how are you viewing this in terms of the overall outlook over the medium term?
So, last quarter was supposed to be a very difficult quarter, and the fact is you could see a lot of resistance in the market at that point. However, we are very happy to say that our results were almost similar to the earlier quarter. Our EBITDA numbers were similar on a quarter-on-quarter basis. Year-on-year basis, it went up standalone. It went up by about 60% up. So overall, we performed quite well in the last quarter. And the reason why we were able to manage was because we were able to, manage our product mix much better. Going forward in this quarter also, in the initial period, we did see quite a bit of resistance because there was some issue of liquidity in the market. There were some, the orders were not forthcoming so easily. But thereafter, later part of January, we started seeing that situation has improved. And now we are finding that situation is, the prices have already bottomed up in the end of December, early January. Prices are actually improving now. Demand is also seems to be picking up. So I would imagine that, the so-called doom and gloom picture which was there in terms of the demand is not really correct. Situation is improving, and I think we have already crossed the worst already.
So how do you envisage a change in terms of the demand growth? I mean, quarter three saw a slip in the overall demand growth because of destocking by end consumers to take benefit of the tighter liquidity situation like you just highlighted. So how does that change?
So, the fact is fundamentally not much has changed other than there was some issue of liquidity, and also because internationally the prices had come down, and I can tell you the reason why they had come down. People were watching and seeing as to what's going to happen, are the prices going to come down substantially. So the placement of orders were put under hold. But subsequently everybody has realized that the worst or the lowest price is already passed, and since fundamentally nothing much has changed, so therefore people have started placing order. The construction is still going on. The impact of a little bit of liquidity issue which was there, we see that there is some easing up in that also. So therefore, the orders are forthcoming. And coming back to this point as to why the prices had gone down, let me also explain that, what really happened in earlier period, that the demand relatively grew much less compared to in the entire world. I'm talking about internationally speaking, and the supply went up significantly. So therefore, in the last year, the steel which was produced was almost 80 million tons more than earlier year, and out of that more than 50 million ton was made only in China, whereas the Chinese demand came down substantially. So therefore, a lot of that material was available in the market, and that had a very downward impact on the prices, and that is how the entire issue started playing out. And coupled with that, this US-China trade issue also aggravated the situation. But as I said, the Chinese prices have already bottomed out. Their spread between the raw material and the finished product is come down practically to negligible levels. So obviously they cannot go down, and that's what really has happened. You can also see the prices going up in China. So all in all, I'm saying that situation is improved now, and I think this quarter rest of the quarter should be fairly decent.
So give us an outlook on prices. You're talking about Chinese prices bottoming out. Has the effect already kicked in for Indian steel manufacturers? Have you aligned yourself accordingly? And going forward, while you said that the demand has been coming off, has the glut in the pipeline been cleared already, so that now when you start afresh, your prices have come up and your demand has started picking up?
Yes, so what really happens, you asked what is the relationship between Chinese prices vis-a-vis the Indian prices. What really happens is that in today's world everything is so much kind of aligned to each other. India used to export quite a bit. Now because the prices in the world came down, international prices came down, so therefore those exports declined. Once those exports declined, still our production was going up. So therefore those materials were available in the market, let's say in the domestic market, and that also has an impact on reducing the prices. But having said that, our own demand is also fairly strong. The good point is that our GDP growth is still going well. The internal demand is also okay. So we are actually seeing that more and more orders are now coming, and the prices, the downward pressure on the price which was there earlier, it is no longer there. The prices are improving on a day basis. It is actually improving. So that's the point which we are really saying, that it's a very positive impact that we are seeing now.
Steel mills have increased prices by 1,000 rupees per ton for Feb 19 bookings. Is that the extent of the price hike that you envisage, or there is likely to be some more on the anvil?
So, let me also explain. We are also seeing that the raw material prices have been, they are going up. You must have seen that because, some iron ore in the market is not available. Vale had this accident and so on. So immediately based on that, the positive impact on the prices, steel prices are also going up. What it actually shows is that the basic fundamental demand exists, and people were just waiting for a situation to kind of, they're watching and wanting to understand what's happening. And that's how, we see that the prices are also going up. So yes, in this coming, let's say month or so, we actually expect the prices to go up rather than come down.
You increase prices, Mr. Ansari?
I'm sorry?
Have you increased prices?
Could you repeat that?
Have you increased prices, sir?
So yes, we have increased prices, and yes, we have increased prices in some segments of the product. For example, the rebar prices which had bottomed out, we had already increased the prices marginally. We have also increased the prices on structures, because those are the areas where the demand is quite strong. In some areas, we still have not increased the prices, but going forward, we think that there would be possibility to increase.
Has the full, while the Vale issue has recently risen, and you will see pressure building up in the iron ore prices, has the full impact of that been already factored in while you're increasing the product prices right now, or there is more to come in the coming few months, and you will see a full-blown effect in the near term?
So you see this, the fact is that import of iron ore in India has also started, it has been building up, but majority of the iron ore within India remains, comes from India only. So if you see that the domestic iron ore prices are actually going up, and which they have gone up, in the recent few days you might have seen that in Orissa miners they have increased the prices. So that price build up, certainly will come further, over and above what has already been done. So we really believe that, that impact of that, if those prices don't really go down, let me also explain that a little bit. If you look at the iron ore prices which were going around, let's say around $70 or so, suddenly they jumped to in 90s, and then they have also come down to mid 80s. So when Indian steel prices, Indian iron ore prices have also gone up in line with those international prices. But I expect that now that these iron ore prices, international prices have actually come down, the Indian iron ore prices should also come down. And once that happens, then the impact on steel prices will be somewhat limited. But if those prices don't come down, then I'm sure that the steel prices will also go up.
The current increase that you've taken, does it cover for the increase in raw materials?
No, not really, not much. This is primarily because it had gone down to such a level where it was becoming difficult. So we have, it is just the natural thing just to come back to the normal situation. It is not fully taking care of the raw material impact. Because that is still a little bit of unknown quantity. It needs to be fully understood.
Right. Mr. Ansari, just one last question before we let you go with regards to an outlook on the pickup in steel volumes for yourself, as well as realizations, and how do you think they'll stack up compared to the current run rate?
So, we are producing currently, in the month of January, we produce at the rate of 6 million ton, and that's where we are. Going forward in the month of February and March, we are actually increasing that production level. So we think that, we should be able to sell that, and the current indications are very, very clearly that, we should be able to sell that. So we should, exit this year somewhere at the rate of somewhere between 6 to 6.5 million ton. That should be the exit rate available for us, which is a significant increase compared to where we started. So all in all, what I'm saying is, in this quarter, we do expect that our volume will also grow, and the prices will also become better than what they were in the last quarter.
All right, Mr. Ansari, it was a pleasure chatting with you. Thank you so much, sir, for joining in. All right, that's Mr. Ansari there of JSPL. So pretty optimistic comments there, saying that he expects demand to pick up. They are taking price hikes, but obviously not to the full extent of the increase in cost of production. But hopefully their volumes also reach those 6.5 million tons that he spoke about.
Let's wait and watch how that happens, and as and when it happens. So that's that one space which is under focus. The other one which is certainly under focus is NBFCs or BFSI. First it was the IndianOpen fiasco, which in turn triggered a run on liquidity, and then came the scare from DHFL. India's non-banking financial companies have had to deal with two quick blows in quick succession. Add to that Z and a few others, and all of that has made investors and analysts step back and rethink their love for the NBFC space. Let's try and dissect the impact of the recent spate of news with Avinash Singh. He's joining us, works at SBI Cap Securities with us to talk about his take on the situation. Avinash, good having you. Thanks much for joining in. I want to start off with the news-heavy companies and then move on to the space at large. Let's start off with Diwan Housing, if we can. Two pieces of news. One is sources telling Bloomberg Quint that BOB has initiated the forensic audit on DHFL, and then the fact that the CEO has resigned as well, which is the company's intimation to the exchanges. What does this do to DHFL, one, and can there be a collateral damage to NBFC space and other institutions as a result of this piece of news?
Yeah, hi, good morning. So I would first take that the piece of news regarding CEO's resignation. So I have also read what they have filed to the exchanges, and if you read closely, I mean, it suggests that the CEO has been relieved from its current responsibility, but he has not dissociated himself with the company, and he has been moved to a new position as a sort of someone heading the retail business. And what I read it as a just sort of, I would say it comes in line what they have sort of announced their strategic alternatives, that they might do a sale of their retail piece of business. That is relatively, you can say, a more granular, cleaner book where it will be easier to find even the buyers. There will be interest. So they have almost 60% of their entire loan book in retail mortgage. And so so that current CEO has moved to that role. So I would read it as just a sort of it's a that okay, moving forward with this plan of a strategic realignment. So there is not much to sort of read differently in that. Regarding that forensic audit piece, probably, I mean, once this the news or that rather that revelation by Cobra Post came, of course the banks would be taking, if at all, at I mean their call to just look into the allegation, look into assess the books. So I mean, again, that is something I would say, again, a procedure that will follow eventually once you have this kind of news or revelations.
Interesting. The last few days, we've seen a bunch of these NBFCs come off quite rapidly as well. It's been chalk and cheese performance. Some of the lending companies like Edelweiss, for example, under a serious cloud. Others have had a chalk and cheese behavior. IIFL has fallen quite a bit. Motilal Oswal hasn't. We've seen some of the housing finance companies having a volatile time as well. What do you think is happening here? And let's dissect each of these one by one.
Yes, so I mean, to be honest, if you see, I mean, that it is broadly playing out the theme. So I mean, it has been sort of a stark contrast in that investor analyst sentiment over the last 1 year, almost slightly more than a year back. And the street investors were gung-ho on this NBFCs, I mean, impressed by their growth and sort of expanding margins. But things started to change once the era of easy and cheap money started to change direction. I mean, almost in the time of rising interest rate, your cost of funding started to go higher. That was the time when but the again, point to be noted here is that okay, it was not the rising cost of money that really led to this problem. It is eventually that what has unfolded since the time IL&FS crisis. It's the availability of money. So I mean, NBFCs have enjoyed sort of easy and cheap money, particularly from the wholesale market over the last 2-3 years, where money supply was abundant and that also was cheaper. And so
Avinash, Avinash, sorry to come in. My point is, so this is now well discovered. The point is, despite this knowledge being there, there is serious pressure that is happening on select NBFCs vis-a-vis the others. Why is that the case? Why is it that Edelweiss as a stock is really taking it on the chin? IIFL has fallen, yes, 50% from its levels, but it's not as badly impacted as this one is. What's the difference, and what should people do with these names? I mean, the broad macro story is known now. Are there individual issues which are impacting each of these stocks? Let's start off with the brokerage names, then we'll move to the insurance companies.
Yes. So in terms of brokerage, it is not the broking. If you look at whether it's Edelweiss or IIFL or JM, I mean, of course, traditionally they have been known as brokers, but if you look at the broking piece that is going into their earnings or book value, that's very little. So eventually they have turned lenders. And in the lending space, it is just not about Edelweiss. You can just move your time horizon a bit here and there. But if you see Edelweiss, IIFL, JM, Aditya Birla Capital, the Piramals, everybody who has been sort of exposure to, particularly on the wholesale side, on the asset. So that is what I was continuing the story, that okay, a few months back it was focused more on the liability side only, that okay, wholesale liability was causing the trouble. Now over the last, you can say, a couple of months or a few weeks particularly, the intensified focus has shifted towards your asset side. On the asset side, whosoever has exposure, higher relatively exposure to the developer space, That is where the problem is. I mean, so you look at the names like Edelweiss, Aditya Birla Capital, IIFL, Piramal, all these guys have relatively reasonably high exposure on the developer book. Now, is that really a new thing? Not really, because I mean this is how their business model has been, but off late the pressure has increased because of the increased tightness in the systemic liquidity, and also some of the banks expressing publicly or privately that I mean they will be going slow on funding the developers. So that has sort of added to this pressure that okay, what if I mean the NBFCs are right now not in a position to go with incremental lending, because I mean they are finding it difficult to raise funds to fund their asset or disbursements. At the same time, if the banks are going to go slow or freeze lending to the developers, there could be a real fund squeeze on the developer side, and that could sort of unravel some sort of a default from the developer. So it's a developer concern regarding developer book that has been sort of putting pressure on this stock. What is happening in the reality, I mean, if you talk to maybe developers or some of these lenders, they are saying that okay, things are difficult, but has sort of a lending or repayment stopped? Their answer is coming that no, that okay, it is still continuing business as usual. So that is not, but yes, the perception or expectation is that okay, if the banks are not going to sort of provide liquidity of funds to the developer in this hour of need, I mean there could be a real pressure on them, and that may put in turn pressure on these financiers. So and that is where I mean if you look, you can just shift the time. So if you look the last 10 days, probably it could be Edelweiss. If you move a bit back, it could be Aditya Birla Capital. So all the wholesale fund, yeah.
So are you then comfortable? Are you still uncomfortable going out and investing in these companies? I mean, there is no need to. My question is that a lot of people will look at the prices then and the prices now and believe that the pain is in the price. Do you believe the pain is in a price for an Aditya Birla Capital or an Edelweiss or an IIFL?
Yeah, so the prices definitely reflects that okay, a reasonable amount or most of the pain is in the price. But the question here would be twofold, that okay, is pain in the price? The answer would be likely yes. I mean, depending upon the names, you can have your pecking order. The second part, is the pain over? The answer will be definitely not. So I mean, going by the way, I mean, unless the banks come forward to sort of provide liquidity or fund to developers, particularly now you have elections on the horizon, so there are a lot of political plus other macro uncertainties. So going, looking that way, I mean, your next I would say at least a quarter or two is going to be painful time. So that way, I mean, your prices are reflecting the pain, but is the pain over? No. I mean, pain is going to continue for a couple of quarters. I mean, after that, at this point, definitely you would see a lot of value in these stocks, because I mean, they have certain sort of you know, the competitive strength or brand. You can say that okay, that cannot be replicated overnight. One can today, when you are bearish, you can argue that okay, what is the competitive strength of these NBFCs? But the point is that okay, they are catering to certain class where I mean banks are not yet, despite that you know the banking system credit growth picking up, they are not going to cater to those classes. So the pain is going to last for a couple of more quarters. But yeah, so that answer, the pain is over? No. Yeah. Is the pain in price? Answer is probably yes.
Okay. My final question, a quick one. I don't know if do you have individually have coverage on Karur Vysya Bank, Avinash?
I mean, no, we do not have coverage on banks, and also, I mean, banking space is largely looked by my another teammates, so I would reserve my comment on banks.
Fair call. Appreciate that. But Avinash, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. Look forward to have you more often. That's the view from SBI Cap Securities. On the developer-facing NBFCs, he believes that there could be some more pain. So the Edelweiss is Jain Finance, the Edelweiss, Aditya Birla Capital, IIFLs and Piramal Enterprises certainly fit that bill, wherein he believes that even though prices have corrected, maybe there could be some more pain. Just want to mark two names before we wrap up the show. There is pressure on Bharti Airtel and Bharti Infratel in the session today. Both the stocks have fallen about 3% apiece. Keep that at the back of your mind. Reliance Industries too is lower in the session today, so that is looking weak. Two-wheelers have bounced back today. Hero MotoCorp, Bajaj Auto, Eicher Motors, actually even Tata Motors is up. And lastly, CG Power, which was down about 30% yesterday, started off 5% lower, is now higher by 5%. So do watch out for all of these names. It could be in focus today.
All right, and with that, it's a wrap on this edition of Indian Open from Neeraj, myself, and the entire team that's put the show together. Thanks a lot for watching. Lots of market action continues on the FNO show.